Hello and welcome to Play, Food and Drink Business's monthly wrap of the biggest stories shaping Australia's food and beverage manufacturing sector. I'm Kim Berry. This month saw major acquisitions, executive shake-ups, industry awards, fresh questions over Australia's research capability and continued pressure on balance sheets across the sector. Let's get into it. We begin with one of the highlights of the year, the 2026 Hive Awards. More than 150 leaders gathered in Sydney to celebrate excellence across Australia's food and beverage sector, with winners recognised across innovation, technology, packaging, new product development, manufacturing and leadership. The awards once again demonstrated the depth of innovation occurring across the industry, from emerging manufacturers and technology providers through to some of the country's largest food and beverage companies. Congratulations to all the finalists and winners. In regulatory news, Coles and Brown Dairy were fined more than $1 million by the ACCC for breaches of the Dairy Code of Conduct. The ACCC found the companies failed to comply with requirements relating to milk supply agreements and pricing notifications. The case serves as a reminder that compliance with the Dairy Code remains a priority for regulators as they continue to monitor conduct across the supply chain. For processors and retailers alike, transparency and adherence to contractual obligations remain firmly in the spotlight. Across the Tasman, Synlait announced the resignation of CEO Grant Watson after just 1 year in the role. His departure was part of a broader leadership reshuffle, with several senior executives also leaving the company in recent weeks and months. The changes come as Synlait continues its efforts to stabilise operations and rebuild financial performance following a challenging period marked by debt pressures, shareholder intervention and changing customer relationships. The executive turnover does add another layer of uncertainty as the infant formula and dairy processing company works through its recovery strategy. Endeavour Group has been in the headlines this month as well, with it unveiling a sweeping $300 million cost reduction program. The owner of Dan Murphy's and BW&S announced plans to exit its wine production business, Pinnacle Wines, close wineries, reduce overheads and cut its dividend as part of broader transformation program. The moves reflect a growing focus on cash generation, operational efficiency and supply chain resilience in an increasingly volatile market. Following a different period that culminated in administration earlier this year, Pure Foods Tasmania appointed experienced food industry executive Peter Barder as its Chief Executive Officer. The company is seeking to rebuild momentum under new ownership and leadership, with Barder tasked with restoring operational stability and positioning the business for future growth. One of the month's largest transactions saw Hewitt Foods move to acquire Queensland beef processor Nolan Meats. The deal significantly expands Hewitt's footprint in the red meat sector and strengthens its processing capabilities. The acquisition reflects ongoing consolidation across Australia's protein industry as companies pursue scale, supply chain integration and export growth opportunities. SPC Global launched a $100 million capital raise, with the bulk of proceeds earmarked for net debt reduction as the company works to reset its balance sheet less than 18 months after it listed on the ASX. Management said that the capital injection will provide greater financial flexibility as it continues integration activities and pursues growth opportunities across domestic and international markets. George Weston Foods expanded its bakery portfolio with the acquisition of New Zealand-based Abe's Bagels. The purchase strengthens George Weston's position in the growing premium bakery category and provides additional opportunities for product expansion across Australia and New Zealand. The acquisition reflects broader industry trends as well, looking at moving towards premiumisation and category diversification within bakery and convenience foods. Ciro received a significant boost this month, securing an extra $387 million in federal funding over the next 4 years. However, the organisation confirmed it would continue with previously announced restructuring plans, including the reduction of hundreds of positions and its exit from its food science department. The decision continues to generate concern across the food manufacturing sector, with industry stakeholders questioning the long-term impact of Australia's food innovation capability and commercialisation pipeline. And finally, in dairy sector consolidation, Arla Foods, Maya Australia, acquired yoghurt manufacturer Brancourts. Brancourts has operated in Australia for almost a century and is one of the country's best-known yoghurt producers. The acquisition strengthens Arla Foods Maya Australia's local, it's a mouthful, Arla Foods Maya Australia's local manufacturing footprint and provides additional scale in cultured dairy products. It also reflects continued international interest in Australia's dairy sector and its strong reputation for premium food production. That's it for this month's Play News Review. For full coverage of these stories and the latest news from the sector, visit foodanddrinkbusiness.com.au. If you enjoyed this update, don't forget to like, share and subscribe. I'm Kim Berry. Thanks for watching.